Good afternoon, Lower students. This is Mr. Corey, your college and career advisor. Today we're going to talk about credit cards. Now, this is going to be a good supplement to the lesson that you're doing in EverFi, which is called Ways to Pay, and you're learning about different methods of payment and the positives and negatives of credit. So we're going to talk about specifically credit cards. Credit cards are extremely popular with millions of people in this country. They can get you in a lot of trouble, though, if you're not careful with them. So today we're going to talk about how to be careful with a credit card. Okay, think about as we go through this presentation what you've heard, what you've learned about credit cards, what you know, who around you may have one, people in your family, whatever, and then what you want to know. So what do you want to know to be smarter about them? Okay, we're going to start with talking about credit. Credit is when something is received in exchange for a promise to pay back money in the future. Okay, so somebody is lending you money that you are saying you will pay back. All right, the borrower requests money, goods, or services from the lender. So borrower is you. The lender gives you credit if they believe you will pay back the money, and then you pay back the lender, of course, with interest. All right. Now, some shocking numbers that you're going to see. The average balance per open credit card in the United States is $1,157. That's a lot when you add this right here, interest, okay? Because interest is the price of money that is borrowed. So whenever you pay back a loan or a credit card debt or anything that you've borrowed, you're paying back the loan in full plus whatever interest is tacked onto it. In the country, the United States has credit card debt to the tune of $880.5 billion. Thinking about that, what could you do with that? And also, what could a family do with that, or a person do with that $1,157 worth of credit card debt? U.S. households that have credit card debt, on average, okay, have $15,799 per home worth of credit card debt. That is a used car. That is almost the price of some lower cost new cars, all tied up into credit cards. Okay, so delving into this, credit cards. They're plastic cards that hold pre-approved credit. It's real simple. You buy now, you pay later with interest. Each credit card has a credit limit. All right, that is the maximum amount that can be charged on a credit card. It's not a goal for you to hit, it's the maximum amount that can be charged on a card. All right. 34% of Americans paying only the minimum payment. So every month when you get a credit card bill, you have a minimum payment. That's the minimum that you must pay. You don't have to pay any more than that. You can, but that's your minimum. And 34% of Americans are paying only that minimum, which is a problem, and we'll show you why. Okay? Payments, you can pay the total of the bill due. So if you have a $100 charge, you could pay all of that, or small amounts that are equal or unequal, whether it be the minimum payment of 25 4 times to get to 100, or 30 one month, 25 another one, 30 another one. Think about it, but think about what you would do if you had a credit card bill right now. Are you going to pay the full amount? Okay, so the interest is not charged, or are you going to pay it only in the small amounts and rack up the interest charges? Think about that. That minimum payment we talked about must be paid every month, no exceptions. The average value of each credit card transaction in the United States is $76. So if you think about an average minimum payment on a credit card is usually $25 to $30 if your balance is relatively reasonable. Okay, so every time you make a transaction, 76. You're only paying off 25 if you're only making that minimum payment. Now you see how the debt racks up so fast and how it takes so long to get it back down. This is extremely important, credit card interest. Now I might throw out some terms to you you've never heard before, you're curious what they are. Hopefully this will answer some of your questions. Okay, APR is an annual percentage rate. It is a percentage, okay, that of the interest rate that's charged on a credit card. This is the fee you're going to get charged if you don't pay your bill off in full every month. So you have an example here. Why would someone choose a card with an APR of 10% instead of 15%? Well, the answer is that 10% is lower. So you're only being charged 10% interest instead of 15%. Okay? If you don't pay your balance off in full, this is what you're going to get charged, is that APR. And I will tell you that most credit cards are way above 10 and 15%. They're more around 20% for your interest. Here's an exercise that's going to show you how credit cards can get dangerous. So let's say Melissa and Skylar both purchased a plane ticket for $500. They both used their credit cards and each credit card charged 15% APR. Melissa paid the full amount owed in 1 month, $500. So because she paid the full amount owed, she didn't pay anything in interest, paid it off. Done. That $500 ticket, $500, done. Skylar paid the minimum due each month, which is $20. It took her 31 months, almost 3 years, of paying $20 to pay this off. She paid, because of that, $103.25 in interest. So a $500 plane ticket cost her $603.25. And she was still paying it off almost 3 years after she took the trip. So that's $103 of interest on a relatively small balance. We saw the average balance on one credit card is $1,100. Think about 10 to 15% interest on $1,100 if you're only paying that minimum payment every month. How quickly you can get into trouble. And what could you do with that extra $103? What could you do with whatever extra amount that you paid in interest? If you hadn't paid it in interest, think about what you're doing with it. This is a review from what you've learned. Debit cards obviously connected to your bank account. You pay right then. Credit cards not to the bank account. You can pay it later. All right. How do you get a credit card? You examine the credit card offers, you apply. Simple. All right, couple rules here. You have to be at least 21 unless you have a proof of income or a cosigner. Okay, you can get a credit card as a high school student if your parent cosigns or you have a job. With some banks still won't do it, but there are plenty that you can find that will. Cosigners are equally responsible for the account. That's very important. So if your parent signs on to you to get a credit card and you don't pay, the bank's coming after them and you. So you could ruin your parents' credit too if you mess up with a credit card if they're a cosigner on it. Some positives and negatives. Advantages: credit cards are of course very convenient, useful in an emergency. So if you don't have money to cover something, although the emergency fund is very important to build that up so you have money to cover things, but if you don't, they're useful for emergencies. Many vacation places and car rentals require a credit card to hold a reservation. Even if you can pay it in cash, they won't take it. They want a credit card. Okay, you can purchase expensive items earlier, but that can get you in a lot of trouble. All right, some credit cards come with bonuses like frequent flyer miles and cash rebates, although I will tell you it takes so long to get anything good. You won't be raked in debt before that happens. All right, disadvantages: paying interest if the balance is kept on the card. Okay, if you don't pay it in full, you're paying interest. Additional fees are going to apply if you don't use the card properly. So if you max out the card, do stupid stuff on your account, you can get charged a fee. It's tempting to overspend because it's so easy. All right, and risk of identity theft, whatever, that happens with a debit card too. The do's and don'ts: do pay your amount charged in full every month. Try to. Make your payments on time every time. Keep track of charges by keeping your receipts, so that way you know if there's a fraudulent charge on there that shouldn't be there, you can report it. Check your monthly credit card statements for errors. Okay? Don't make late payments. Pay only the minimum payment due. Don't do that. Okay? You're going to give interest. Don't go over your limit, and don't charge items that can't be paid off within the month. If you can't afford it with your debit card, you really can't afford it with your credit card. Save up. Irresponsible credit card use is going to cost you. Late payments if you don't pay your minimum payment on time. If you're over the limit, you'll get charged a fee. And if you have too many late payments, too many credit card maxings, you're going to get a penalty APR. That means any new transaction after a penalty, you're going to have a higher interest rate on. So if you use a credit card irresponsibly, it is going to hurt you. That is why we're trying to teach you how to use it responsibly now. All right, quick review and credit card statement. You're going to get it every month. Summarizes your important information, any transactions made, what amount you owe, what the minimum payment is, and your due date. So examine it, make sure everything looks good, make sure you know your due date, pay it on time. All right, be safe with a credit card, keep it safe, don't share it, make sure you sign it. If you get any credit card offers in the mail, and you will, believe me, they're going to come at you because they know they're going to try to get you. Okay? Shred them. Don't just throw them in the trash, shred them so you can avoid identity theft. Check your statements. Make sure that your statements are correct. Okay? Pay the balance 100% and avoid interest. I cannot stress that enough, how quickly you can get in trouble with a credit card. They can be positive things if they're used responsibly, very evil things if they're not. All right, benefits can occur if you use them wisely. Use them non-wisely, major consequence. All right, and if you get nothing else out of today, I hope you understood that. If you have questions, let me know. Send me an email or come talk to me. We can talk to you about it. Our goal is to make you smarter financially so you can win with money and succeed financially in your life. That's one of our major focuses of our college career readiness program. I hope you enjoyed this. If you have questions, holler at me. Have a great day, Lauren Nokomis.